Technology is more than a device, system, or industry.
Technology is built by people for people.
It's built for people with desires and needs and ambitions.
By our people, who are
talented, curious,
creative,
and diverse.
Our people use innovative strategy, design, and engineering to offer end-to-end solutions that help companies to quickly transform and scale their operations globally.
While we create technical solutions, all we really want and what motivates us is
to make their tomorrow.
CI&T, we breathe and build tech to make their tomorrow.
Good morning, everyone. Welcome to CI&T earnings call for the fourth quarter of 2022. I am Eduardo Galvão, Investor Relations Director at CI&T, and it's a pleasure to be here again to talk about our results. With me on today's call are Cesar Gon, Founder and CEO, Bruno Guicardi, Co-Founder and President for North America and Europe, and Stanley Rodrigues, our CFO. This event is being recorded and all participants will be in a listen-only mode during the company's presentation. After that, there will be a question and answer session for analysts and investors only. If you'd like to submit a question, please send it via email to investors@ciant.com. The presentation is available on the company's investor relations website at investors.ciant.com. The replay will be available shortly after the event is concluded. Some of the matters we'll discuss on this call, including our expected business outlook, are forward-looking statements, and as such are subject to known and unknown risks and uncertainties, including but not limited to those factors described in our earnings release and discussed in the Risk Factors section of our annual report on Form 20-F, and other reports we may file from time to time with the SEC. These risks and uncertainties could cause actual results to differ materially from those expressed on this call. We caution you not to place undue reliance on those forward-looking statements because they're valid only as of the date when made. During this presentation, we'll comment on certain non-IFRS financial measures to evaluate our business. Please refer to the reconciliation tables of non-IFRS financial measures in the appendix for more details. Our agenda for today includes an update on our financial highlights, followed by some of our successful business cases. We'll then talk about our people and ESG strategy, and deep dive on our quarterly financial results. After the presentation, there will be a Q&A session. Now, I invite Cesar Gon to begin our presentation.
Thanks, Eduardo. Good day, everyone. It's a pleasure to be here with you today. As we reflect on 2022, I want to take a few moments to talk about our vision for the future. Innovation is the ability to create unprecedented and effective solutions to solve complex human problems. The best opportunities arise from the intersection between two secular forces, changes in values and behaviors of society and the exponential advancements of technological possibilities. Each new tech paradigm always demands a radical shift in the practice, process, and methods for connecting the dots of digital strategy, customer-centric design, and full-stack software engineering. And before the advent of these new ways of work, it's impossible to capture and scale the value of the latest technologies. CI&T's core competency is method-driven innovation for large and fast-growing corporations. By reshaping the way we connect new technologies, management systems, and leadership models, CI&T creates a sustainable impact in the corporate world. It's undisputed now that a powerful set of emerging technologies such as artificial intelligence, IoT, blockchain, and 5G are reaching maturity and critical mass to move consumers and enterprises. Notably, the whole industry should thank the team of OpenAI for bringing generative AI to the forefront of public and corporate consciousness. It creates ideal momentum to speed up the adoption of AI and accelerate the flywheel of digital as a secular trend. In such a rapidly changing landscape, CI&T has an essential role in helping our clients to capture digital opportunities efficiently. We call it digital efficiency, and 2023 is the perfect time for companies to turn years of foundational investment into scalable business ventures. At CI&T, we are obsessed with efficiency for our clients and for ourselves. We have always been in the cutting edge of digital innovation with our method-driven approach. It's an infinite game, and we are designed to continue leading the way in the years to come. Now let me comment on some of our financial highlights. 2022 was a non-trivial year, and I'm pleased with our accomplishments. Our net revenue reached 2.19 billion reais in 2022, an increase of 51% year over year, or a 58% growth at constant currency. CI&T high growth pace has been a combination of the expansion of our engagements with existing clients, demonstrated by a robust net revenue retention rate of 126% in 2022, the addition of 84 new clients to our portfolio, reaching 178 clients with annual revenue above 1 million reais, and our programmatic M&A strategy. The adjusted EBITDA margin for the full year was 19.1%, a solid profitability mark considering the consolidation of the acquired companies. We ended 2022 with more than 6.9 thousand CI&Ters, a net addition of 1.3 thousand employees during the year. Again, I want to take this opportunity to express my gratitude to all CI&Ters across the globe who have been very dedicated to making this happen. Stanley will deep dive into our financial results shortly. Since its foundation in 1995, CI&T has recorded consecutive profitable revenue growth over 28 years. We faced several challenging times throughout this period, and we have not only grown but always emerged stronger. In the last 4 years, from 2019 to 2022, our CAGR was a solid 48%. As we face uncertain times, I'm confident that CI&T is even better prepared now to navigate the ongoing challenges. Today, CI&T is more diversified in terms of the markets we serve. Europe represents almost 10% of our revenue, compared to 2% in 2020. The US and Europe are the regions that are growing faster organically. More than 55% of our revenue today comes from mature economies, trending to 60% by the end of 2023. Our top 10 clients' revenue share evolved from 67% in 2020 to under 50% in 2022, trending to 40% by the end of this year. This diversification results from the disciplined and recurring addition of new clients to foster our sustainable growth. In a nutshell, we are confident we will continue our profitable growth journey by generating impactful results for our long-term clients. Now let's go through some updates and concrete examples of how we are creating value across the globe.
DreamLab is a specialist crowdsourcing app that harnesses your smartphone's processing power to create a secure virtual supercomputer, are made of thousands of smartphones to accelerate scientific research. Developed by Vodafone Foundation and CI&T, this groundbreaking and award-winning app has 2 million users across 17 countries, and has already helped accelerate research into treatments for COVID-19 and cancer. DreamLab's latest update is turning its power to help researchers at Imperial College London to better understand tropical cyclones. Tropical cyclones are a major global hazard adversely affecting millions of people, and causing billions of dollars in damage every year. Professor Ralph Toomey, co-director of the Grantham Institute of Climate Change and the Environment from Imperial College London said, "A desktop computer running 24 hours a day would take decades to process the data, but a network of 100,000 smartphones could do the job in just a couple of months. By simulating extreme weather events, to understand their effects on communities, we can help people to better prepare and adapt to some of the worst effects of climate change." DreamLab is free and ready to download now, giving you the chance to be a part of the world's biggest virtual supercomputer and participate in this important research. Anima is an educational organization with 18 higher education institutions and more than 600 centers for digital education in Brazil. Intending to strengthen its learning ecosystem, Anima joined CI&T to integrate and unify its learning management system, supporting the demand of more than 389,000 students. Anima and CI&T also designed a new reference architecture to replace the original legacy system. Using the latest technologies that could offer continuous delivery, they reduced integration time by 95% and enabled app modernization. The role of AWS in the project was to provide data transactions using Apache Kafka, an open-source platform for data processing.
Anima Educação and CI&T band together, strengthening the learning ecosystem in order to prepare the company for a key moment in its business.
Panasonic is well known as an electronics manufacturer, and Panasonic Connect is a developer of software suites that enable manufacturing automation that Panasonic uses and licenses to other manufacturers.
CI&T helped Panasonic Connect and its partners develop modern asset management solutions that improve productivity, flexibility, and scalability, deployed in the cloud or on-premise, all from a single codebase.
The first step was to avoid disrupting what was already in use, since manufacturing downtime is unacceptable. Using a single customer as a pilot, CI&T worked with Panasonic Connect to navigate through its desire to maintain current functionality, security, and compliance while beginning the work of modernization.
CI&T understood the hybrid environments in which most companies work, and the solution's single codebase addressed those environments. Keeping the focus on user outcomes, utilizing analytics to determine impacts, and seeing application modernization as part of a more significant overall digital transformation, CI&T was able to deploy cloud-based software to a current customer within 4 months, validating the technology, staying in close touch to get feedback, and iterating along the way.
The results of the architecture that CI&T developed with Panasonic Connect are delivering impact and value beyond the initial scope of the engagement.
Welcome to our news latest update. We have gathered the most recent information and insights from our leadership team to share with you. CI&T will return to South by Southwest for the 4th time on March 14th for a full day of interactive programming. To nurture relationships and boost brand awareness, CI&T will host panels with brands like Sun Life, Audi, YouTube, and more. Panels will feature important leaders of CI&T, from retail customer experiences and EV adoption to product-based teams, the developer workforce, and decoding culture. The day will deliver mind-shifting perspectives and must-have insights to make organizations efficient in the post-digital transformation era. On January 15th to 17th, CI&T sponsored NRF Retail's Big Show in New York City. Melissa Min-Cole, Director of Retail Strategy at CI&T, joined Petco's Chief Administrative Officer, John Zavada, for a conversation highlighting the findings from CI&T's annual Connected Retail Report. CI&T also had a booth presence and a prospect dinner in collaboration with Crown Peak. On January 6th, CI&T and Box 1824 launched Trends for the Future report, a study on the main drivers and trends in the digital, economic, labor, and sustainability fields for the next 5 years. The research connected the themes of innovation in digital efficiency, healthiness for business, and avenues for growth. CI&T received the Best Supplier Award in the Innovation category from Cielo, a leader in electronic payments in Brazil and Latin America. Cielo recognized the company for being a valued partner and for its commitment to delivering high-quality digital initiatives at speed and scale. Hosted by CI&T President and co-founder Bruno Guiccardi, Straightforward is a web series featuring thought leaders in the digital transformation space. The 6th and last episode of the first season was released in November, and a second season was launched in February. The opening episode of Season 2 was Understanding the Complexities of AI to Create Business Value. Upcoming episodes will feature conversations on team-based organizations and data. This is our CI&T latest news. Our aim is to keep you informed and up to date on our latest developments and achievements.
CI&T announced the launch of Work Ready. This comprehensive guide covers the principles that guide how our people work, the workplaces of the future, and the skills required to make work happen. With research, market insights, and the perspectives of CI&T leaders, Work Ready provides a unique point of view on the transformations in the workplace and what it takes to be prepared for them. Better Future, the world's largest network of design award programs, announced CI&T as a winner of the Australian Design Awards 2023. CI&T's Empathy Lab workshop was awarded silver in the category Systems Social Design, recognizing initiatives that optimize system performance by focusing on human elements. The Empathy Lab workshop is a digital series of exercises designed to build empathy for people with disabilities. It is a highly interactive experience where participants complete tasks using technology with various sensory simulations designed to mirror the experience of a person with disabilities. The Next Gen, People with Disabilities Edition, is our training and hiring program for interns and assistants with some kind of disability. More than 2,000 people registered, seeking training opportunities. Taking place in Brazil, CI&T offered over 500 free scholarships and hired 10% of the program alumni. 136 CI&Ters facilitated the program, investing a cumulative 12,000 hours in practical training for participants.
The program has been changing my life in many different ways. That's something I've always wanted to do, and now this is possible.
Today, the people are hired already by more than 20 different clients, and this partnership is important in helping with real inclusion. Putting people into operation, generating accessible and inclusive digital products with professionals with disabilities in all stages of the process, making it a business benefit for CI&T and clients. Implementations that meet the search for digital efficiency, such as generative AI tools, are constantly experienced at CI&T.
We're seeing an explosion in applications across text and image and video, audio, data and code. It's a step change powering the efficiency opportunities in digital software development. Today, every industry sector should examine the potential application of generative AI across their user journeys.
CI&T has been evaluating generative AI innovation in relation to time savings in creating repetitive or pattern-based code. Thus far, CI&T has been exploring various tools, including Tab9, GitHub Copilot, and ChatGPT, with great enthusiasm due to the significant productivity gains achieved. As this technology is still in its nascent stages, we are proud to be trailblazing a new path for software development, with the expectation of realizing exponential improvements in our team's performance.
In the automotive space, we are working on an initiative to use generative AI to create vehicle assets, images, descriptions, meta information. In the asset management space, we're using large language models to ingest disparate bodies of financial information and research, and then transform that into accessible information, products and services that they can use for their clients and also sell back into their clients. In the pharma sector, we're working on a proof of concept to curate scientific content from different sources and then produce summarized information about the latest research, drug information and usage, and then provide that to the MSL or the medical science liaison to use in conversations with physicians.
I hope you enjoyed our client stories, news, and highlights selection. Now I invite Bruno to address our talent management and ESG strategies.
Thank you, Cesar. And good morning, everyone. It's a pleasure to be here again to talk about our people and our operations. We ended 2022 with an outstanding mark of over 6,900 CI&Ters, a net addition of 1.3 thousand people. Since 2019, we have pretty much tripled our global team. Our strategy to attract and hire the most talented people is based on processes and practices we have been evolving for decades. More recently, we are penetrating new talent markets based on the work from anywhere approach, which has proved to be a successful model in our industry. The working environment that we created at CI&T, based on a culture of trust, allows us to retain our people for longer. Our attrition rate at the end of 2022 was 14%, compared to 16% in 2021, and continues trending down on a monthly basis. The leadership attrition remains below 5%, guaranteeing consistency and quality in our delivery. In 2022, we strengthened our global presence with bright people from acquisitions in 4 different geographies, adding complementary expertise in industry verticals and technologies. We are proud to have such a diverse and global team of almost 7,000 people, creating a company that stands out not only based on its growth and financial performance, but mainly based on its human values and its contribution to improve the lives of the people we touch. Today, we publish our second ESG report, detailing our initiatives, actions, and goals in the environmental, social, and governance front. ESG is a key pillar at CI&T, and being able to share our progress with our stakeholders is a matter of pride for all of us. Our ESG strategy is driven by a shared vision to create equitable advancement opportunities for everyone, provide educational and workforce experience for underrepresented groups, and reduce our environmental impact to create a more sustainable world. Our ESG journey was initiated back in 2009 when we created a sustainability area. Since then, we have evolved our governance and created several programs and action groups, decentralizing this decision-making and providing power to the edge. Since July 2021, CI&T has been a signatory to the UN Global Compact, reinforcing our commitment to sustainable development. And in 2022, we conducted our first materiality analysis, which allowed us to clearly articulate our ESG strategy based on our stakeholders' valuable contributions. I invite you all to download and read our ESG report, available in our Investor Relations website. Let me provide you with some data that gives us the confidence we are on the right track. In 2022, 43% of the people we hired were from underrepresented groups. This is an upward trend and shows our commitment to ensuring that CI&T represents the communities where we operate. On this International Women's Day, we're happy to share that women in top leadership positions increased from 23% in 2021 to 25.7% last year, and our goal is to reach 30% by the end of 2025. We also impacted more than 22,000 people with our social initiatives during the year. It is a fantastic achievement and aligned with our vision of creating a more equitable world. We conclude our first greenhouse gas inventory to measure the company's carbon footprint in scopes 1, 2, and 3 for our Brazilian operation. And early this year, we neutralized 100% of these emissions via nature-based carbon removal projects, supporting the conservation and restorations of the Brazilian biomes. For 2023, we are committed to expanding our greenhouse gas emissions inventory to our operations in the US and the UK. Now, I invite Stanley to comment on our financial results.
Thank you, Bruno, and good morning, everyone. I'm glad to be here with you to talk about our financial results. Starting with our performance in the fourth quarter of 2022, our net revenue was 612 million reais, an increase of 34% year-over-year. Eliminating the FX variation, our net revenue grew 42% compared to the fourth quarter of 2021. Our adjusted EBITDA in the fourth quarter was 127.4 million, 25% higher than the fourth quarter 21. Adjusted EBITDA margin was 20.8%, a reduction of 1.5 percentage points compared to the fourth quarter 21 due to higher SG&A expenses in the quarter. Sequentially, the adjusted EBITDA margin improved 1.6 percentage points from 19.2% in the third quarter 22 to 20.8% in the fourth quarter 22 due to better utilization rate and lower SG&A expenses as a percentage of revenue. The adjusted net profit was 54.5 million reais in the fourth quarter 22, 4.3% higher than the same quarter in 2021. The adjusted net profit margin reduced from 11.4% in the Q4 21 to 8.9% in the Q4 22, mainly due to a negative foreign exchange variation of 25 million reais in the comparable period that impacted our financial expenses. Now let's deep dive in our annual results. For the full year of 2022, our net revenue was 2.19 billion reais, a 51.5% growth compared to 2021, of which 36% was organic growth and 15% was the contribution from the companies acquired in 2022. The negative foreign currency translation impact was 6.4%, so the net revenue growth at constant currency was 58%. The 2022 net revenue is 3.2 times the net revenue of 2019, recording a CAGR of 48% in the period. Let me break down the components of our high growth profile. Our net revenue retention rate was 126% in 2022, demonstrating our ability to continuously strengthening our relationship with our existing clients through value creation. In addition, we added 84 new logos with revenue above 1 million reais to our portfolio during 2022, of which about half are organic net additions. This cohort of clients will contribute to accelerate our revenue growth in the coming years as these engagements ramp up over time. Analyzing the numbers of our multi-million accounts, you can see that our growth engine, based on our land and expand strategy, has been robust. The number of clients generating more than 20 million reais annually doubled from 2020 to 2022, and an analogous growth is also valid for our accounts generating more than 5 and more than 10 million reais. The addition of new clients combined with our strategic M&A approach contributed to diversify our revenue base. Cesar already mentioned how we evolve our revenue breakdown over time in terms of geography and top client share. I would like to emphasize that we are growing faster organically in the US and Europe, and recent acquisitions should speed up our growth within those regions. Thus, by the end of 2023, we expect about 60% of our revenues coming from mature economies, including the US and Europe, while our top 10 clients' share should evolve to 40%. Now, talking about our profitability metrics, our adjusted EBITDA was 417.5 million reais, an increase of 28.8% compared to 2021. The adjusted EBITDA margin was 19.1% in the year, a solid result already including the impact of lower margins from the acquired companies and the increase in G&A expenses driven by the strengthening of our back office teams associated with our IPO. Most of these general and administrative are fixed expenses and should be diluted over time. In addition, in the fourth quarter of 2022, we reduced our real estate property lease based on the flexible working environment that we have been operating, such as the hybrid mode and the work from anywhere approach. Thus, we expect lower leases expenses going forward. In the fourth quarter 22, we already noted a reduction in our SG&A expenses as a percentage of revenue compared to the third quarter 22, and we are fully committed to optimize our cost structure to benefit from operating leverage opportunities and optimize our profitability. In 2022, adjusted net profit was 213.6 million reais, 30.2% higher than 2021, while the adjusted net profit margin for 2022 was 9.8%. The incremental debt position at the end of the year was mainly to finance the Entersol acquisition. As we mentioned in our previous earnings call, last year we concluded our first wave of M&A, and we are now dedicated to the integration of the acquired companies. In 2022, we generated 112.4 million reais in cash from operating activities net of taxes. If we analyze our organic operating cash generation, excluding acquisition-related cash outflows, the cash generated from operating activities net of taxes would have been 172.1 million reais in 2022. We ended the year with 282 million reais in cash and a sound financial position to foster our growth. Now, I invite back Cesar to comment on our business outlook. Cesar, please.
Thank you, Stanley. As I mentioned, we are bullish regarding a growing number of technology advancements and the imperative for companies to continue to increase their investment in digital initiatives. Nevertheless, the global economic situation remains with a high level of uncertainty. As our clients define their budget for 2023, we see consistency in keeping the current digital investments and programs. But we noted a more conservative attitude regarding opening new initiatives. We also see less tolerance for low performance and a focus on efficiency, increasing the room for CI&T value prop of digital efficiency and more opportunities to replace low performance competitors, including more willingness to nearshoring services. So, reflecting this macro scenario in our projections, we expect our net revenue for the first quarter of 2023 to be at least 590 million reais, a 20% growth year-over-year. And we are also projecting sequential growth throughout the year. So for the full year of 2023, we expect FX neutral net revenue growth in the range of 13 to 17% year-over-year. We expect our adjusted EBITDA margin to be at least 19% for the full year of 2023, maintaining our current margin level. Our 2023 outlook is based on the current market conditions and reflects the uncertainties we see in the demand environment. Finally, I sincerely thank our stakeholders, clients, investors, partners, and CI&Ters for our continued support and commitment to our long-term shared vision and goals. Thank you all for attending our call today. We now conclude our presentation and may begin the Q&A session. Thank you.
Thank you, Cesar. Thank you all for joining us today. We'll now begin the Q&A session. I'll announce each participant name. Once you hear it, please unmute your line and ask your question. Then when you're done, please mute your line. First question comes from Ashwin from CD.
Thank you all for the opportunity and the presentation. My question is on, if you could provide various incremental revenue metrics for 23 in terms of how the revenue projection breaks down organic versus inorganic, and given that you are now more diversified, how do you see growth across your various regions? If you can start with that.
Sure. Thank you, Ashin. Good to see you. I think I will start by giving you the components. Our 15% of projected growth for year-over-year for 2023 is estimated now to be 90% organic growth and 6 percentage points coming from M&A. And regarding, we are forecasting an incremental sequential quarter increase along the year. And what in terms of geographies, I think what we are seeing since last year, and it will continue this year, is more traction on the USA and Europe. And I think it's based on marketing conditions, but also I think there is the specific fact that we acquired amazing companies in those geographies. So we have plenty of opportunities for upselling, cross-selling, organically expanding these new acquired platforms for growth. So basically, we are expecting a sequential expansion along the year.
Okay. And the follow-up is taking a look at the underlying both macro assumptions, as well as if you look at your own conversations with your clients. How would you characterize the visibility that you currently have? Many other companies that we have spoken with have kind of mentioned that maybe things slowed down dramatically in the December timeframe. January was very quiet, but in February things have maybe started normalizing. Some say things have started picking up. Are you seeing actual visibility that things are picking up as we go out, as budgets get set, and so on and so forth? Any color that you can provide on visibility would be great.
Sure. Based on my conversation with our clients, I believe the macro and the demand environment, you can always see the half full glass and the half empty glass. I think first I would start saying that we are bullish regarding the growing number of technology advancements, a lot of trends in consumer behaviors, and we still see the imperative for companies to continue increase their bets, their investment in digital. I think this is is reinforce our vision of long-term vision of digital as a secular opportunity. Nevertheless, I think December and early January, we could note that this global economic situation adds a lot of uncertainty during the budget process of our clients. And as they define their budget for 2023, we could saw first consistency. They are keeping their current digital investment and programs, but we also noted, I would say, a more conservative attitude regarding open new initiatives. And then as the year move on, I think I see the half full glass now, because what I see that is resonate with CI&T value prop is much less tolerance for low performance and a focus on efficiency. This increased the room for CI&T value prop of digital efficiency and a lot of opportunities regarding replacing low performance competitors, including more willingness to nearshoring services in the developed economies. I think this is good perspectives for the way we are positioning and the way we are fostering efficiency among our clients.
Great. Thank you for those details.
Thank you.
Thank you, Ashwin. Next question comes from Tyler Dupont from Bank of America. Tyler, please go ahead.
Thank you very much for the question. Just to dive a little bit deeper into Ashwin's visibility question, particularly, are you seeing any change in client contracts or changes in what clients are looking for with those contracts? For example, have you seen any elongations or client delays in newer existing projects? Any clarity there would be helpful. Thanks.
Thank you, Tyler. I'll get this one too. What I see is a change in the nature of the use case. I think there's a great prevalence of focus on proven use case. We call Horizon 1 and Horizon 2 initiatives over more experimental initiatives. We name Horizon 3 more I would say long-term bets on digital and technology. So if you go for vertical, you're gonna see financial service, banking, and insurance companies focus on concrete things like customer experience, online banking, open finance that is trending now. Of course, you have more Horizon 2 initiatives like blockchain, trading, fraud detection, and so on. And if you go for retail, you're gonna see omnichannel, e-commerce, marketplaces, and of course, if Horizon 2, AI, customer service, augmented reality, you're going to see less of this and more concrete, I would say, use case that are proven in the vertical, and the same for consumer goods and so on. So I think the main change we note is a more pragmatic approach on digital that again resonates with CI&T value prop of really combining strategy, design, engineering, very short cycles to see concrete results, and then expand from real evidence of success.
Great, I appreciate that. Thanks. And just regarding as a follow-up to the go-to-market strategy, I'm just curious if you can speak to the revenue contribution mix between winning new logos and upselling / cross-selling within the existing client base, and just the how willing clients are to take on those upselling / cross-selling opportunities given the current market environment.
Sure, Tyler. 2022 was an impressive year of expansion in our portfolio. Our net revenue retention reached 126% along the year, and we could add 84 new clients, long-term clients with revenue above 1 million reais. So was a good combination of land expand, and the way we are seeing 2023 is I would say the same mix. That's probably the growth. Our results will basically 85 to 90% based on expansion on current relationship with the current clients, and 10% max comes from new logo. Even though we always emphasize that it's important the discipline of every single quarter you add new logos to the game, because this will not be relevant in terms of revenue in the short term, but will be very important for in the year 2, year 3 for sustainable long-term growth. So, of course, this uncertain times is in a special moment where you need to reinforce the business development discipline of not only supporting the current portfolio and expansion on them, but also keeping the traction of adding new logos to our portfolio.
That's very helpful. Thanks, Cesar.
Thank you, Tyler.
Thank you. Next question comes from Puneet Jain from JP Morgan. Puneet, go ahead.
Hey, thanks for taking my question.
So you had like a very strong new client addition and expansion in existing clients during this quarter. In fact, both metrics were better than what they were in third quarter. How do we view those metrics against like the backdrop of deteriorating macro environment throughout last quarter? What drove those clients to sign with CI&T, considering that that is going to be a big part of sequential growth beyond Q1?
Sure. As I mentioned, thank you for your question. Great to see you, Pune. As I mentioned, I think there's this change in the nature of the use case. And also there's, for us, normally, I think in the last years, if you look at the kind of engagements and the way the entry point for CI&T was normally half of our new engagement started with strategy, digital strategy, and then we follow with design and the full stack software engineer. I think, and probably 25 to 30% was regarding replacing poor performance, really turnaround of engagements that was not moving in a good way in our clients' perspective. So, but now we see probably 70% of what we are doing is regarding digital efficiency, and meaning replacing or adding CI&T approach, method-driven innovation approach to engagements that are already running, and now we are really transferred to CI&T portfolio. So I would say that this is probably the main difference. There's less new initiatives in this beginning of the year and more focus on engagements where efficiency or digital efficiency and turnarounds are the main point of the engagement.
And can you also share various puts and takes for margins this year? Like, what do you expect for wage inflation, supply pressure, pricing, utilization rates, and what should we expect for hiring over the near term?
I think Stanley can get this one, right?
Yes. Well, we see with regard to inflation, Pune, lower pressure compared to previous year. So we see things settling down in that field. We, as you may recall, in our operation, we have this seasonality in terms of margins because in the first quarter, we have the salary adjustments in Brazil. And throughout the year, we improve margins again when we have the price adjustments. You know also that in Brazil, we have the built-in price adjustments clause in the contracts. So, and we see as we navigate in this type of digital engagements that we have high flexibility in terms of talking about price and negotiating. Once a year, we sit with our clients to add new functionalities, adjust our contracts. So we see a normal environment for that. Of course, we have all the efficiency conversations going on, and this is also an opportunity for us to adjust and our proposal or value prop in each of our clients. So we see a good perspective in for the year in that matter.
Got it. And what should we expect for hiring? Like your net headcount was about flattish on sequential basis from 3Q to 4Q. What should we expect for hiring trends over the near term?
I can take that one. So as similar to the seasonality, so Q1 is usually slower, right? So we see that speeding up sequentially over the next quarters. So probably you're going to see more additions in Q2, Q3, and Q4 than we're going to see in Q1.
Got it.
And the market, of course, has kind of with the economic downturn, it's been easier to hire, of course, across the board in all geographies that we operate. So that's the new reality there. It's still competitive. It's not that's easy. It's just easier.
Yeah, appreciate the answer. Thank you.
Thank you for the question, Pune.
Thank you, Pune. We have a question here via email from Cesar Medina from Morgan Stanley. Amid macro uncertainty, are you seeing any signs of demand stabilization and improvement, or is it too early to tell? And then we have a follow-up here on, can you comment on the FX losses during the fourth quarter?
I can start with the second part of the question, the FX variation here. Medina, thanks for the question. As you may recall, we have an operation, a nearshore operation. So that's with regard to the accounts receivable in the Brazilian operation, as we have a functional currency in reais. We have to record through the P&L all the fluctuations. The accounts receivable is in dollars. The counterpart, the accounts payable in the US operation, as we have the functional currency in dollars, we don't pass that into the P&L. It's a non-cash event. So that's the main actor behind that variation in the Q4. The first part of the question, maybe.
We can get the second one. Like I said, second one. Thank you, Medina. Great to see you. Well, in terms of, I think the budget process was very effective to give us visibility on the current engagement that allow us to project a solid year based on the certainty of that we will continue a lot of big, very critical digital engagements with our clients. What we have less visibility is regarding the launch of new initiatives. I think December and January it was very cloudy. Now we see discussions happening, so more I would say evolution in our pipeline for new stuff, and that give us some positive perspective regarding the year. But I think it's too early to say that it will the speed of the demand will get reach a high level of traction, I would say. That's why we are guiding 15%. That is a conservative, but I think based on the current market conditions and what we have been discussing with our customers.
Okay, we have a few questions here from the buy side, so I'm going to go through them. I want to touch on the talent side and get your view on what's the current level of the attrition rate and how is that performing over time.
I can take that one, Galvão. Thank you for the question. Attrition, given the slowdown and overall market, attrition of course is going down. So it's trending 14% in Q4 against a 16% before that in a last 12-month base. And we continue to see it trending down, right? So if we look at the first months of 2023, it continues to go down, which is good. The most important one, I think, to just reinforce for us, it's actually turnover on the leadership echelon, and that's well under control. That's actually what has sustained, our growth and the consistency of our quality and delivery, and that's well under control. And that we're happy with. Also, I think on the talent side, I think it's important to notice the evolution of our diversification strategy, right? So we're coming from a 92% concentration of our labor force in Brazil in the end of 2021 to 85% in the end of 2022. So we continue to diversify with a strategy, to work from anywhere, all over Latin America and also Canada and many different regions in Europe as well. So that's kind of gives us an opportunity to kind of tap into even a bigger talent pool and continue to support our clients globally.
Thank you, Bruno. So the final question here is actually a combination on two topics. Could you please provide more color on the potential disruption of generative AI in your industry, and how are you guys preparing for that? And the follow-up, and how are you thinking about M&A in 2023? Can you talk about your objectives here and comment on the recent acquisitions you've done in recent quarters?
That's a lot of questions there. I can take the generative AI one. So we see generative AI as like a big tsunami of a new disruptive change that will affect many industries, including ours. So we are actually already working with some clients, as you saw in the video. There's anywhere there's a massive body of content. I know generative AI can be a great tool to kind of help synthesize and make sense of them. So in healthcare, for example, we're already working with clients, trying to kind of synthesize and make sense of medical information and research to help doctors and to help our clients in pharma, for example, educate their salespeople to have those conversations. We see many use cases, in retail and financial services as well. So, and of course, there's the impact that we'll have in our own industry in software development, and that's so we're eating our own caviar to later help our clients, to serve that caviar for our clients. So we've been experimenting with many tools, not only ChatGPT, but also Copilot from GitHub and Tab9. And our developers can get in ahead, to really try and use those tools to kind of get more productive, eliminate repetitive tasks. And it's not only software development; it's all over the streamline, even in design, like a creation of new visual elements. We're using text to image type of tools, even research. Right? So we just completed a project with a client where we kind of synthesized 5,000 user journey kind of interviews in a matter of days, just using generative AI. So it's all across the board. We'll create exponential gains in terms of productivity. Things will be able to be done, but much faster and much more powerful. So we're very excited with what can bring to us and to our clients, and we're ahead of the game, and we'll continue to be ahead of the pack there and helping our clients navigate this world.
Well, I can get the M&A one here. As we announced previously, we concluded our first wave of acquisitions, and we concluded earlier than planned. We will now fully dedicate into the integration of those recent acquired companies. We are reinforcing this imperative of this long-term organic growth, which is we've been growing through all the history on top of that. We also are aiming and focusing this year on a solid cash generation and get prepared for the next wave of M&As. But for this moment, we are focusing on the integration and reinforcing this sustainability and long-term organic growth principle.
Let me chime in and add some comments on Stanley. I think we mentioned with Ingersoll, we conclude an amazing cycle and create a robust platform for organic growth. Another update that is important, I think, it's that Somo, Box 1824, Transpire, Ingersoll are already fully integrated from the business standpoint, operating as growth units, CI&T growth units under the CI&T brand, of course, except Box 1824, which will preserve its identity. And as Stanley mentioned, back office functions are being integrated in a much more careful manner. And so And of course, we see tremendous value on M&A. We are in a very fragmented market, a lot of opportunities of geographies, competence, verticals, expertise that we can speed up through M&A. But we, as Stanley mentioned, 2023, you should see less activity in this matter. But moving ahead, you should see M&A as part of our long-term strategy.
All right, so that concludes our Q&A session. Thank you all for attending our event today. I'll now pass it to Cesar Gon to proceed with his closing remarks. Cesar.
Sure. Thank you, everyone, for your time and attention. Thanks, Eduardo, Stanley, Bruno, for joining me today. Well, I think our results reflect the talent and hard work of our team, and I'm proud to work with all the CI&Ters across the globe. We are confident that our foundations are solid, and we will continue our journey of growth and value creation for all our stakeholders. Thank you once again for your support. Stay well, and we look forward to seeing you next quarter.